Righto, money miners, welcome to another week, and it is being delivered by Axis Mining Technology, the trusted provider of drill hole survey instrumentation.
How good, Matty?
Oh,
How
mate,
good?
I'm as of today, I'm putting geologists and drillers on notice. If you aren't using an Axis Champ Gyro or an Axis Champ Ori, you're on my list, and you don't want to be on my list,
Mate,
boys.
Once you're blanked from Matt Michael, you're
Yeah,
blanked.
no, it's not good.
Good to be with you, mate. I'm excited today.
Let's rip in. JD dialing in from across the ditch. Cobber.
Mate, we've got plenty to talk about today. We've got a bit of a special one, don't we?
Yes, we do. So this one's very unfortunate circumstances up at in North Queensland. We're going to go through the fire at the Grosvenor mine for Anglo. Thank God that everyone is okay.
Is it Grosvenor?
Grosvenor.
Grosvenor.
Is that how you pronounce it?
Yeah, yeah.
Is it
Yeah,
S
mate.
silent? Mate, I hate when you read words, but you've never heard them said out loud.
Yeah,
You sound like an idiot.
Very out. I
told you so, Trav, but I found it out this morning.
I would not have expected that from you, Trav. I won't lie. So, yeah, God, I'm glad everyone's all right. And we've got a couple of pretty much the first two people you think of when you talk WA1 with the maiden resource coming out. They're actually the first two guys we talked to initially about it. And they're coming back on to talk about the resource estimate. And
Emanuel Datt, Bogan Geologist.
well, I was going to keep them a secret, but yeah.
I just wanted to
That's all good.
wanted to make sure people listen.
Everyone's going to hear him anyway. And Calidus, VA's appointed. So
Yeah, more unfortunate news.
yeah, so bloody, yeah, 2 versus 1 there on the fortunate side of the news. So, right, boys, let's kick it off. Anglo coal. So, and this is quite pertinent at the moment on the back of the, I guess, the failed BHP Anglo tie-up and the I guess, announcing a sales process for these met coal mines. But a fire began on Saturday at the Grosvenor underground met coal mine up in the Bowen Basin. So as we said, thankfully all mine workers were safely evacuated and doesn't appear to have been any injuries. So thank God for that, which was not the case 4 years ago at that mine. But we'll get into that. JD, what's going on, Cobber?
Yeah. Just to start with, Matty, second what you said there, these things, haven't read a fair bit about them now. Very, very thankful that no one was hurt there. So like you said, started on Saturday. It'll take a while to put the mine in context. 2.3 million tonnes of met coal production in the first half of this calendar year. 3.5 million was guided for the entirety of 2024. It produced 2.8 million tonnes in 2023. So it's been a bit of a patchy mine. It's not all that old a mine. It kickstarted in 2013. And you might notice, like I said, a bit of a difference between half one and half two for this calendar year. That's due to a planned longwall move in the second half of the year. So the fire itself not put out yet. Essentially, they've just got to starve it of oxygen. They'll pump nitrogen in to displace the oxygen. It can be kind of complex. It's not something Anglo's done sort of before at this mine. It does appear from having spoken with a few people that it's come from the 104 panel. But again, can't really confirm that.
Is that where the previous one was, JD, in 2020?
That's right, Matty. So there's a really good video on the back of the report that came out of that incident in about mid-2020. So 4 years ago, 5 people were hurt back then. And it was the first major explosion at a Queensland coal mine, underground coal mine, in about 25 years. And thankfully, the methane explosion didn't lead to a coal dust explosion at that time, which could have made it a whole lot worse. My understanding, although again not quite confirmed, I've heard differing sources, is that portion of the mine was permanently sealed. But one of the key takeaways is that operations were on hold for over 18 months at the time. So it wasn't until early 2022 that things kickstarted again there. And I'll point people in the direction of @real Hage Tucker on Twitter.
Hags, the coal expert.
A great source. He's done a number of good posts, like quite a few people have on the events over the weekend. And what he pointed out, which I'll point people in the direction of right now, is that you can see there was increased gas drainage following that event to try and improve safety, essentially.
Yeah, it was like, and when you say those 5 workers were hurt, those 5 workers were like on the in the longwall face, and like this explosion, like the guy in his I think it was on the coroner's, the coal board inquiry, said it was like being in front of a blowtorch. Like they were miraculous how these guys got out. It was phenomenal. It was just horrific. Had 10 surgeries, that fella posted. So, and because what happened, like the coal mining board inquiry found for that event that 2 weeks before that explosion, there was actually like, there was a reported instance where methane levels of 5.04% were recorded. Now, why that number's so important is it's regarding the explosive limit for methane concentration. So methane's the main gas that comes out of coal seams and surrounding strata rock. I don't know what your percentage is, Trav.
It's pretty high.
But yeah, so if methane levels are between approximately 5 and 15% in normal air, that means it's flammable and can explode. If it's above or below that, it won't explode. I think it can burn. If it's lower, it can burn around another fire, but it doesn't explode. So that's why like ventilation in underground coal mines is like the most important thing, because you need to flush enough air out of the mine continuously to keep the methane levels below the 5%. So, and because the coal board inquiry for this 2020 incident determined that they had higher production rates, which were causing, because they're taking more coal off, you're causing more methane to come into the mine. And there was, I guess, they determined there was no attempt made to slow production to better control the gas. So yeah, as JD said, check out that. It's like a 20-minute video on the whole, like animations and everything on YouTube and all the findings. So it's pretty so much goes into controlling gas at these mines. So, and another comment was seen on Twitter about the deeper met coal, like deeper underground coal mines coming online are going to be more gassy. And my understanding is like as they like advance the longwall, like everything's cracking and failing behind and above the mine. So all that cracking means more gas can then go down into the workings. Like it's cracking the rock, which releases the gas. So the deeper you go, you got more rock crack and more gas coming in, and it's always so it's going to be a big control. So yeah, and
you got, speaking with people, they're not exactly shocked. Exactly like you say, Matty, gas has been an issue here for quite a while. To put it all into a bit more context now, to play out the implications of what's gone on here, Anglo advertised this mine as a $1.95 billion mine with a 30-year plus mine life. And I mean, the key question we're all asking is how long is it going to take to reopen, if they can get to the point where it can be safely reopened? And then following on, what's the impact on the met coal market? So again, just going to deflect to people who are actual experts in this space, not ourselves, but there's some smart people as well as some historical comparisons that we can point to. And yeah, it's still early days, but relaying some of the information, people are saying many years is not unreasonable. People saying 5+ years wouldn't be out of the question. Anglo themselves said in the announcement on the weekend that in assessing the steps forward to safely re-enter, and that's not to start mining, just to re-enter and assess the actual damage, is going to take months. So I've seen a director at UQ's Minerals Industry for Safety saying a reopen could take years, and then other people who prefer to remain anonymous have said, many years indefinitely is not off the table. And another aspect of that is whether they'll be actually able to recover the longwall machine. They'd be hoping they can get it out of the panel in which it currently is, and then seal things all off. I'd imagine that's the way they go about it. They might not be able to get it. Maybe they can get it, and there's a bit of a rebuild. Regardless, there's a bit more capital going out the door on that front.
Oh, and it's all the chocks that you lose as well, like the things that support the roof and crawl forward as you advance the longwall. You sacrifice all them as well. So it's a bit of capital involved in that.
There must be some serious implications, there's some substantial production coming out of this. We know this is the best bloody coal seam in Queensland, and what are the implications for the buyers of that product, and more broadly in that market, JD?
It's not super straightforward. Obviously, coal, it's a commodity, but there's a whole lot more to it than that. As plenty of people would know, there's various quality attributes, customer preferences, and all these sorts of things. But essentially, they're mining hard coking coal. They're currently trading a bit over $230. As a rough indicator, using volume of 3.5 million tons per annum, we're talking about 1.4% of the global seaborne market.
Yeah,
and
wow.
But you got to note that the output from the mine has fluctuated a lot. So they advertised it as over 5 million tons per annum. But since that 8 or 9 years since it got started, we've seen years from zero in 2021 when it was shut to 4.7 million tons and kind of everything in between. So it's kind of dependent on performance there. They are producing high fluidity mid-vol. So we're talking about a 25% vol there. With that specific quality of coal, it's closer to 2% of the overall market. So low and mid vol supply globally.
So that volatile content, JD, is this a high quality met coal classed as 25% volatile content?
Yeah, in the broader context of met coal and coal broadly out there, this is a higher quality product.
Yeah.
And there's a fairly analogous example in Peak Downs, BHP mine. So in September of last year, they had 2 trucks slide, and I'll credit Coal Trader, done a Substack on this one, does a lot of good work, and wrote up something I think last night or this morning on the topic. And he pointed me in the direction of what happened there and why it's a good sort of analogy. 2 million tons of production were pulled off the market. Production was essentially stopped for a couple of weeks, but then it was slowed for the remainder of the year. On the back of that, you saw prices run 29% in the next month and a bit, so 35 days.
Yeah,
and that was from a level of $280 a ton to roughly $360 a ton. Now, we're not in the exact same situation. You've got China. They get a bit of a glut of steel at the moment. They've got a lot of it, so they're not quite as hungry. Q3 is typically a lower production quarter. You've got a lot of planned longwall moves like they had at Grosvenor here and a few other mines. But you've also got a few other issues that play into it. So there was an accident at the Blackwater railway system. Not a huge deal, to be honest, but this does impact Curragh, Jellinbah East and Kestrel, obviously, as well as Blackwater. That goes out to the port of Gladstone. That's a bit of a smaller disruption. But overall, the market for met coal is pretty tight, the seaborne market. And I think this just puts a bit of support under it for a while to come.
Yeah, wow. That 1.4% doesn't sound small, but when you think of how much coal's mined around the world and shutting one mine off like that, I feel that is a big number.
It's fragile market.
Yeah.
Whenever you just chop a couple percentage points off of global supply almost instantaneous, it does have a big ripple effect that's out more than just a couple percentage points on price normally.
Matty, worth bearing in mind, we talk about the seaborne market here because a lot of coal and predominantly energy coal is consumed in the country in which it's mined, but this not being the case, this goes out to the broader market. But
so by seaborne market, you say coal that is mined and exported off.
Yeah.
Sure, anywhere or sent to China. Yeah.
Yeah, or in India or wherever. Yeah. So another number that came to mind, 1.5% was the size of Cobre Panama in the context of global copper supply. And obviously there were a number of other production holdups in the broader copper market, but that happened. When did it happen, fellas? October, November last year, and then we saw on the back end of that, this first half of 2024, a run from $3.70, $3.80 up to $5.15 a pound for copper. So it was just one, although a fairly significant contributor to a run up in the commodity price there.
You can see the market kind of pricing in some of that already today. Like, Whitehaven's up like 7%. That's like a $6 billion market cap, $7 billion market cap kind of, company. 7%
every single
is
name.
Massive.
Coronado up 11%.
Yeah. there is an interesting question on like which names would be the biggest beneficiaries of it. And I've seen some commentary on Twitter that maybe some of the US listed names will actually be who produce a similar high quality coking coal will be the better beneficiaries because of the way the royalties are structured in Queensland. If you make super profits, you just give more to the government.
Yeah, righto. Yeah, so because the Whitehaven assets, Blackwater and Dornier that they bought, as you said, they weren't the cream of the crop, but they'd have a bit more torque to the coal price if they're not the cream of the crop. Yeah, or that's negated a bit by the royalties.
Yeah, and there's maybe even more important implications for Whitehaven is their participation in the sale process now. JD, how do you weigh that up?
Well, I mean, it's a bad hiccup to say the least for Anglo's plans to sell it. This had been going on for a little while now. We've spoken about it a few times. The last bit of news we saw was that Morgan Stanley was hired to run the process, and some sort of mainstream media organizations wrapping numbers of US $5 billion around the whole coal portfolio there, although bearing in mind the valuations had been a bit lower, so they want a bit of a kicker to buy the lot there. But Grosvenor was contributing a fair bit, I mean, a bit over a quarter subject to performance. But now you've got this challenge plus capital needed to fix things up. And I saw our dear friend Koala, he sort of put numbers of $2 to $3 billion US would maybe get a deal done. One of the key points, Trav, is that I think you get, like you're sort of saying there, you get a number of participants, suitors who are it's much more affordable to them. 4 or 5 billion was, Glencore, they're the main name that sort of came to the top of a lot of people's minds. Maybe BHP if they were to play ball with an individual sort of met coal acquisition, but at a $2 to $3 billion range with the teamwork from a Japanese or an Indian sort of group, steelmaking group that want to lock in supply, then it's an acquisition that's much more palatable to a whole bunch of potential buyers. But I think there's a huge question that needs to be answered, and it can't be answered for a while. And it's going to have a super material impact on the price. With all that extra safety work that was done following 2020, the thing was shut down for over 18 months. Why did we still have this incident? And has there been enough? Is there going to be enough to permit people to go and work safely in the future? It could take a very long time. That safety inquiry took well over a year as a rough guide, but it's Moranbah, the town there, it's a coal mining town, and the people are going to want to go and work, and they're going to want to be safe, so I think a whole lot of capital and a whole lot of time is going to be spent to get this thing back up to a level where it can get there. And on the flip side of that, that's just going to eat away at the potential price that Anglo can get.
Yeah, and it's I don't know the context, but I would not playing devil's advocate. I don't know the circumstances, but the fact that this time when it happened, no one got hurt, and I'm not sure what measures were put in place if they were evacuated before it happened or something. So it's it's definitely a lot better than what happened in bloody 2020. So, but still a concern that it did happen.
So the selling these coal assets was like the quick single for Anglo to prove that they're with their new strategy of rationalising the portfolio, blah blah blah. And now that quick single looks like you're only getting half a run for it instead of the full single.
Yeah. Imagine if the BHP Anglo deal had been accepted and the process had begun and this happened in the middle of it. Wouldn't have that thrown a spanner in the works?
Totally. Totally.
I don't think a deal would have been wrapped up by...
No, but it would have commenced, like the process would have commenced. So
do you remember the nickel sale in Brazil, and then they had the slide and then event, exactly, you're out.
Yeah. I reckon if this is the first value additive thing that Anglo were doing, and that they've fumbled the ball here, I think it's more pressure on Duncan, and I think it actually plays into Glencore's hands once again there, because they'll be. I think it's hard. It's going to be hard to compete with Glencore bidding for these coal assets, but Glencore are disciplined. They don't overpay for stuff. So if there is a party out there looking to kind of pay overs just to get the deal done, that might actually outcompete Glencore. You didn't mention throw Yancoal in the mix. Even throw, if you want a funky name in there, like Sol Pats via either New Hope or then
there's a whole bunch of them that'll be
Peabody's in around
now,
the area. Like there's it's a much more palatable funding equation for them now than it was before to do the full
talk
portfolio.
About vultures swooping.
Yeah, I think a good point to cap it on is what Respeculator said, and this speaks to what you said earlier, Maddie, talking about the longer term outlook for the met coal market. We're moving into a more difficult geology, broadly speaking, with gassier, deeper underground mines, which all come with their challenges, and a dearth of capex that's been spent. So
that is literally where I stole my point from.
I had that suspicion, mate.
Cheers, Respeculator. He put some bloody good comments on the Mike Bevan interview from Respeculator. He reckons it's a bloody brewer.
Yeah, not as nice as Stock Swami, hey.
Oh, good to see us interacting with him. There we go. No, good stuff, JD. And I hope everyone's all right up in North Queensland. Put it that way. So,
absolutely, mate.
Righto. Next up. The big WA1 mineral resource. Couple of actually a shit ton of dings here. There's 4 of yous.
Yes.
Matty, you're gonna have to play devil's advocate on this one and pull us all down to size, mate.
Yeah, that's the one. So the OG WA1 speakers that we had last year, Emanuel Datt from Datt Capital and Bogan Geologist from Mining Twitter. You'd say, lads, welcome back.
Yeah, thanks for having us, guys.
Hooroo, lads. G'day. Good to see you.
As you said, we're going to raw dog this one, Bogan. Manny, I hear you've been, bloody, before we get into it, I hear you've made friends with Steve de Jong from VRIFY. I hear you're best friends now.
Oh, yeah, absolutely. Such a great product and, why wouldn't I want to reach out to him? That's sort of what I was thinking to myself. Just an incredible product and, really fascinating stuff the guys at VRIFY seem to be doing. So, yeah.
You're tipping a bit in or what? Bloody, you're taking over RCF's holding, are you?
Yeah, well, I'm not surprised. RCF put in their cash. I think I was sort of asking Steve, when's he planning on going public? Because it's such a great product. Why wouldn't you want to have allow everyone to have a bit of a piece?
Glowing recommendation. Right, boys, WA1, the Looney resource is out and it's down. What is it, bloody shit or something? What's going on?
And mate, can you believe it's like it was the 7th of June last year that we had them both on to talk about WA1. Since then, right, like there was only 12 drill holes in back then. The share price was $5.30. Today it's $19, so nearly a 4-bagger in just over a year. No one, including us, knew anything about niobium. I think, Emanuel Datt and Bogan had done some research. But
we didn't know much about lithium or uranium either. So
no one had ever heard of the Wester Hunter. And since then, everyone is hunting for niobium and everyone knows about the Wester Hunter. and why have we asked the two of them back on the show today? It's because the maiden resource, right? 200 million tonnes at 1% is the global inferred MRE that's dropped today with a higher grade subset of 53 million tonnes at 2.1%. What did you guys reckon?
Matty, I'll let you kick off. It's all about you, mate.
Sure. Well, I think it really highlights how incredibly, special this resource is, first and foremost. I think the company, said it the best in the sense that it's the most significant niobium discovery in more than 70 years. And it's truly one of the best or world's best discoveries in recent years, I would say, to find, and it's a really great credit to the team, looking back at how much they've achieved since our initial chat, 12 odd months ago. It's just incredible to have sort of, have basically cracked, met and just defined, a resource of such size and grade and value at the end of it all. So it's really, really great credit to the team, first and foremost, I think. And, there's still so much more to go, I think, in the sense of how long the story where the story could get to. And very much a happy shareholder at the end of it all.
Yeah, and beyond that, I'll just add that it's pretty impressive to see that they managed to get the Met turned around before it, because it obviously allowed them to add the phosphorus into the resource, which was pretty interesting factor, that if this is going to become a multi-commodity play, that kind of opens up a few other aspects to the West Toronto that might be kind of slowing it down in a few people's minds. But as well, a good thing to keep in mind that this has been really turned around in the space of a year, and this is all based off 2023 drilling. And quite frankly, I've got to say, I'm really looking forward to the next one, because if this one was this good, then man, we're going to see some pretty good resource updates out of not much more drilling required. So, yeah, all hats off to the guys. Just looking forward to the next one. And, honestly, the quality that went into the actual document itself, you guys might have noticed Rene, a bloke you had on the channel. He's well known in the industry as one of the guys on the JORC board and stuff. So this is really coming from the right people. I couldn't really fault the statement. Overall it was an awesome resource statement, and Anyway, off to you guys.
So what? I guess where it's sitting now, like in terms of what everyone was chasing, everyone's waiting for the mineral resource estimate, which was probably everyone did their own bloody leapfrog versions of it, so everyone had a gauge of what it's going to be at. It looks like it actually come in a bit higher, the high grade subset of what people were hoping for. But then obviously, as you said, the networks come out as well, so there's the information. Okay, it can be recovered. So that's a tick. So if you combine those two things and then think, right, what's the next catalyst for WA1, or could it just drift here? It seems a lot of the information's out. Is like it's at that point where it's waiting for something like a CBMM cornerstone investment. Do you think that mineral resource upgrades to something that is big already going to have that much of a material impact?
I'll speak on this point. I don't think it's going to be the size of Looney that will be having the material impact in terms of mineral resources. It'll be the confidence, obviously, it going up to indicated, being able to be usable for reserves, but also there's a part to the metallurgy that I'm still very interested to follow. There's a potential that we might see a titanium rare earths product come out of it. So I'd like to see economic studies wrapped around like the final metallurgy that finally comes out of Looney. And so in the next 6 months, obviously the biggest key parts of the resource will be the metallurgical studies on the byproducts and the co-products that will come out of any processing, but as well, you'll obviously start to look for basic permitting and moving towards that feasibility. Obviously, Looney is a massive resource, and it's still open all the way through the east, the southeast, and the west in some areas, and obviously along the northern border with Encounter. So there is scope to see the size of Looney increase. There is multiple regional tenements that they've pegged over the Northern Territory border that they'll obviously start moving on. But our main focus really as investors has got to be the metallurgical confidence improving in terms of the resource. And then obviously looking at Looney as progressing through development into mining as soon as possible. And so that's the one thing that I'll be really watching is, okay, let's see how if you've got your met through to this level, what will we see as it progresses to ferroniobium? Can we see another saleable product taken out? Can we see some specs in regards to what your phosphorus product's going to be? Because then we can start getting some assumptions over what economic value these co-products going to have, and then obviously the final end game. So that's really where I'm at. Not necessarily the resource increasing in size or a depth with a fresh, more just increasing in value through confidence.
Yeah, so you're saying that during like an integrated process where, in addition to the niobium concentrate, you'd be floating off a mixed rare earth concentrate as well as an additional saleable item.
With the titanium, obviously, I'd think that the monazite and whatever the titanium mineral is, be it rutile, they probably come off together. So then you just send that straight over to a Luca and be like, here, it's your problem now.
Yeah. And what did you think about I found it very interesting, obviously the results last week of Encounter that sort of jumped them right up. And the fact those results come from the northern boundary of Encounter's tenement away from Looney, not, I guess, adjacently close to it. What do you interpret that in terms of the regional potential of it? Was it a bit of a surprise or not?
Not a surprise in terms of niobium being present in rocks there. I just don't think it's a massive carbonatite complex in the way that Looney is. It might be an outlying dike or something that's been thrown off by Looney, or something else that might be on Encounter's tenure, or maybe even something further north. But it's really, until they have that XY to it, not just the X, because obviously it's already closed off to the north and south. I'd like to see if they can extend that to the east and west, but Encounter's not really something I'm really looking at the moment. 350 odd million market cap, and people like Charles can go and invest in Encounter for all.
I was waiting for that sort of comment. Emanuel, what did how did the Met results from a couple of weeks ago stack up versus your expectations? I'm sure you've done a fair bit of work into it, looking at NIOBEC and CMOC and CBMM. What were the sort of key points of differentiation with what you'd thought?
Yeah, absolutely. So I think the two main things from our side was it totally blew our expectations out of the water. I was sort of expecting for preliminary MET for such a tough commodity such as niobium, where it's almost a given it's going to be tough given it's such a scarce mineral. We were sort of we were thinking, we'll probably be happy if if the company achieved recoveries of over 30% for preliminary METs. That was our sort of expectation. But so to come in at almost at 58% is an incredible achievement. Even though the sample size, there was a bit of, I guess, discussion about the sample size was I think agreed of about 4%. However, interestingly enough, it wasn't representative, I think, in terms of mineral assemblage. So it was actually, it was from a highly weathered part of the deposit that is actually about 50% pyrochlore, 50% columbite. And I believe columbite, from our research, is actually the hardest mineral to float. So whereas Looney is actually sort of probably, from our expectation, has about probably 75%, is actually 75% pyrochlore, 25% columbite. So it sort of shows that, well, it's not just the grade you've got to look at, it's actually the mineral assemblage. And to crack an assemblage that isn't favorable to MET recoveries at such a sort of level straight off the bat, really sort of gives me a lot more confidence that, well, could this improve over time over other sort of parts of the deposit? I know that, you know, the level of drill density and confidence in Luni itself, there's still a way to go towards variability testing, etc. And that's obviously going to occur over the next, let's call it a year or so. And but it really does sort of demonstrate, you know, what the potential of this deposit could hold. And just, as Bogan mentioned, it's still unconstrained to the south and southeast and east. And it should be a really exciting 12 months, I think. I'm really looking forward to see what the future holds. And it's not just going to be infill, it's going to be extensional. It's going to be, there's so much stuff going on. It's just, incredible.
There are some other things as well that I should mention that have been raised by some pretty well respected members of the mining Twitter community.
At Matty Michaels. Is that one of them?
No. You haven't been around long enough, unfortunately. But Longhorn Capital, Nick Fabrio has mentioned multiple times just the distance. So it'd be good to see something from the company sort of working towards a transport solution or some sort of idea of like really what they're planning on doing with everything moving in and out of the area.
Surely NAIF fund that, right? Like,
Well, NAIF's broke, isn't it? Aren't they done with money?
Are they?
Well, they spent all of it, yeah.
Oh, if they've got a mixed rare earth concentrate, that should satisfy NAIF funding, shouldn't it?
I mean, can they just realise that Arafura is not a good use of taxpayer money? Like, anyway.
But as well as I think tax loss trades was the handle. They've both been around for quite some time. So it's good to see that there's people out there that are willing to raise concerns and stuff. And really, like, I'd like to see more asked of the company about this stuff by other people that aren't as bullish as we so obviously are. But another thing I think I'd really like to see in the next month, 2 months, give me a massive slide deck. Give me a presentation, 60 slides long, summarize everything that's happened so far. Give us 3 or 4 drill cross sections, discuss how Luni has these areas at 30 meters. And then beyond that, just on that 30 meter point, the ore body is very close to surface. Maybe have a look at uncovering it, getting some bulk sampling going, because getting more sample than just can be generated by sonic and diamond drills, getting that to a big lab that is run by the company. You've got the cash. Hell, that's another thing. Nick Fabrio, Longhorn Capital. If there's going to be a raise coming, get that cash. Go spend it on big fucking science facility, factory, buddy, bench scale, pilot scale, fucking niobium plant. Show us what you're going to do. And you've got the ore body within 30 meters. Let's see something of that. If it's not feasible, fuck, I don't know. Yeah.
Yeah.
But
the both of you had some tremendous calls on our episode a year ago. Daddy, couldn't believe there was literally 12 holes in this thing, and you had the quote that they've got multi-100 million ton potential. It's come out today. It is multi-100 million tons in the maiden MRE. And you also said back of the envelope you wanted to see 30 to 40 million tons at 2% as a high grade sort of subset. And we've got, a bit over 53 million tons at 2.1% today. So great calls on the resource, Daddy, with very little data. And Bogan, you did a brilliant call on the pinching of the weathered zone. So some people initially thought that hole 38 might see mineralization taper off, but it actually reappeared beyond it, which was at the time a pretty non-consensus but excellent call as well. So what non-consensus excellent calls have you got for us this time?
Yeah, well, it's you can get lucky.
That might have been. Was that big Tony Goo in the leapfrog engine room sorting that out for you, Daddy?
I think it was a bit of Tony's rigor and my sort of back of envelope. A bit of a combination.
What a force to be reckoned with.
But yeah, look, and I think that you know, you never have perfect information, right? So you've always got to be, I guess, brave enough and perhaps silly enough to sort of make those sort of assessments with imperfect information. 12 drill holes isn't, a great deal of information to make a big call off. But look, I'm just really happy that it's worked out as, or probably exceeded expectations, as you pointed out, Trav. And yeah, look, I think it's still really unknown how large Luni could turn out to be, given the deposit is still open. Big deposits tend to only get bigger over time. That's sort of been my observation of, tier one deposits. I think about deposits like Pilgangora that I know you guys have spoken about recently. And I think the initial, or the maiden MRE on that was sort of, somewhere in the region of 80 to 100 million tons. And today it sits at about 400 off the top of my head. So it just sort of really does demonstrate that these big tier one ore bodies generally do get bigger over time. And that's just sort of one example. I guess one thing we haven't mentioned is also the metallurgical results. It was just basically a two-stage process, which sort of achieved those recoveries. So I think that's also a very sort of interesting sort of situation, because you've got a really fairly simple flow sheet when you're comparing it against the other sort of niobium producers. Araxa, for example, goes through a 4-stage flotation process to achieve their recoveries. So I think that does give us confidence, even in terms when you're thinking about, how's this thing going to be commercialized. It does give you some measure of confidence when it comes through to, well, what's the cost base going to look like? And as Bogan mentioned, you've also got this potential phosphate byproduct that will just sort of feed or further reduce that cost base depending on how you're accounting for it. So, there's quite a number of factors to think about as this thing heads towards commercialization. And also, other stuff like, well, in the study stage, given you've got something that's so high value, do you just go straight? I mean, you obviously got to step through the various stages of the studies, but you wouldn't even go to scoping. You'd probably go, PFS, whether you've been released that, you'd just fire ahead as quickly as possible into a full fee. So that's sort of my gut feel on how the team could potentially approach this. And given the crying need for diversity of supply in this particular commodity, I think that would be my preferred option as a shareholder. Just go as hard as you can towards commercialization.
I'll just expand on Manny's stuff. Go on, sorry boys, you got to know we tag team this stuff. So there's a couple of quick little things. So obviously I mentioned with the MET the potential to spit out that titanium rare earth. So I think that's a huge catalyst. People got to watch out for that one. Number 2, I reckon WA1 could probably do a spinco. They've got tenements down near Balladonia area in the fucking Majura, I think it was, somewhere where I crossed in the fucking Nullarbor, and somewhere up near bloody God knows where, up near the Kimberley or some shit, but they've got all that other tenements and stuff like that. So there's a potential for a spinco. There's also the third one. This one's the most interesting. This is a fucking ding ding dong, because I don't actually own the stock and I probably should at this point. But we've got to realize Agramin, they've pulled out of their joint venture. So now Tally is unencumbered. Agramin is thus unencumbered. So now they're open as a backdoor. They also, as a look-through basis, through Tally, are sitting at 0 EV because of their WA1 exposure. It's something like $60 fucking million or bigger these days. Plus, they've got a tenement. Their tenement actually extends north and is abutting to the east of WA1's area. So all those big fucking juicy east-west fucking faults all actually extend over onto the fucking Agramin tenure. So it's another one that if people are looking for other areas that things might be happening, just have a look at that. But
didn't Agramin limit their tenure to just the lake? So it'd be a pain in the ass to drill, wouldn't it?
Have a look last quarterly, Matt.
Oh, okay. Yeah, right.
Yep. And they're actually exploring it too now. They're going to kick off to it.
Yeah, okay.
So yeah, you have to wear the heinous corporate costs that go along with it, but they got 4 million in cash. So give it 2-3 quarters. That's your kind of option. But yeah.
But you reckon when you got 200 million tonne of bloody dirt, or what is it? Bloody more than that.
Yeah, 200 million.
200 on the dot. Round number, 200 at one. Round numbers, Renee Stirk. I thought there'd be some bloody funky decimals there. Anyway, when you got that much dirt, do you think you're under? Is there any reason to even go spend money on neighbouring tenements when you got that much on your own already?
Oh no, it's just the neurology fucking you got encounter over the fence, 350 million of market cap that's not backed up by anything apart from a few fucking JVs at Southie who haven't found anything in their fucking lives. Yeah, come on, like Agramin pokes one hole into the ground, finds fucking niobium in a rocket. Fucking what's Rincon hoping for? What's fucking Lycaon and all these other hopefuls, CGR or CGN, whatever the fuck they're called. Like, literally, it's a zero EV play, bro. Come on.
Yeah. So it's not an M&A play. It's just a bloody equity mania play.
You're not paying for fucking champagne exploration encounter.
My question to you, Manny, with regards to how the thing trades forward. I mean, we've literally got it on our logo, the Lassonde curve, and you get to a point of peak kind of excitement, discovery, everything can go right. You can exceed expectations. And obviously WA1's done a remarkable job. But then you get to the point where sooner or later things start having to get done. And you've kind of spoken to how I think you're thinking about this with regards to potentially skipping a phase in the study, going straight to a more advanced study. But how do you think about how the company might trade in a point of checking boxes as opposed to outseeding expectations that might be out there?
Oh, it's a really hard thing to pick, I'd say, JD. Like, often I've thought that perhaps a company can avoid, going through the Lassonde curve, perhaps via the, discovery of new resources, etc. I think that's probably the only way that they could avoid that sort of dip. And I think it's not only, as Bogan said, it comes down to ultimately confidence, because we don't know how the resource looks on an infill basis. What if, the grade lifts materially in the infill drilling, for instance? That's not going to sort of necessarily avoid that sort of situation. So I think I'm actually quite eager for the company to continue pushing ahead with exploration, because I believe, as Bogan pointed out, if you have all the sort of players in the region being valued at very high market capitalizations just off neurology, and finding quite a small deposit, small and deep niobium deposit in their own right to the north, why not explore if it adds value? Ultimately, that's what I'm thinking. I think that's sort of the big question for me that I'm still wrestling over in my head. But look, I can say one thing well and truly, that just off this maiden MRE and with those sort of preliminary met results, I would probably say the company well and truly on the radar, in the corporate sense. And I think we spoke about it in our conversation last year that, well, if this gets proven out, then there's going to be, significantly larger fish that are going to be following us a lot more closely. So I think the M&A potential is significant here, given the nature of the commodity, the scarcity, the future facing. It's a future-facing metal, highly critical, and the government are funding, uneconomic competing resources, right? Projects in rare earths, for instance. So yeah, it's just like a whole range of factors that, there's a confluence, I should say, of multiple factors that I think are highly favorable to future returns.
Has your view changed a bit? I remember you said like 12 months ago, like when we were talking about the probability of a repeat of something, something like this, or even just high-grade niobium in general, and you've alluded to the fact it's pretty to find a bloody mineralised carbonatite, let alone one that's highly rich in niobium, was pretty friggin' low. But I guess now you're saying that why not explore in the region? Has anything changed?
I'll just say that the big point about Luni, again, as we alluded to, was the fact that it had such a thick oxidized blanket above it, not just the fact that it was mineralized, but it had that weathering pattern, and it was so close to surface, and it was still remnant, it was still there, it hadn't been washed away. But yes, there is obviously that inherent potential that one might exist in the area. Encounter has proved that yes, the province does extend beyond that immediate border to the north. Obviously, all this action by WA1 to the east has shown that, hey, maybe they might think that BHP has stuck a few holes into other intrusives over the years and not assayed them for the multi-chemical assays that we have these days. And I will just point out the fact that this story really is a story about fucking MEM64 and the multi-chemical assays that we have available so cheaply these days to explorers, because you weren't able to do this cheaply back in the day. This is the chemical fucking engineers. They won for once. But yeah, there is that potential. Obviously, Rio had this joint venture. There's fucking Picali to the south, owned by Rincon, that's had copper showings and stuff like that in the past from the 80,000 explorers that have had a crack at it and stuff. But this is the middle of fucking Australia, dude. Like, fuck. Yeah. I know as good as you, as good as them, well, they probably know a little bit better what the fuck's out there. Laster's Reef still hasn't been found, quote unquote. The Bogan Geologist. I will find it one day. But
put yourselves in CBMM's shoes right now, or a probably CMOC or NIABEC, but probably CBMM's the most probable one. What do you think they're going to look for before they interject in this? Because there's a lot, resources out. The MET looks like it works. What do you think's going to happen?
Manny, I think this one might be you. I've got thoughts on it, but obviously it's got to come from someone with a little bit more financial credibility. My only thoughts really are that CBMM kind of needs to see some sort of concrete step by the company to take it forwards towards production, and CBMM needs to see them survive. If they don't survive and getting towards production development, blah, 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 then there's no point in CBMM being a minor partner to whoever the fuck comes and buys them. They're not going to get a look in. So, quite frankly, you got to see it as until this thing's on its own 2 feet, none of these other guys from any BRICS nations have a chance. Anyone outside of Australia, bar the US, does not have a chance. This thing's going to go to a domestic Australian company, and that's it. Done.
Yeah, exactly. I agree there. I think CBMM have a vested interest in helping this industry grow. And we've seen that over time when niobium demand has fallen off, it's actually been CBMM that has cut their own production to keep the other 2 producing mines alive. So that really does tell you something, right? And going back to Bogan's point, CBMM, private family-owned group out of Brazil, they're not the natural owners of this. It's going to be one of our big local super majors. That's my sort of best guess. And if you're a Rio or BHP, with a clear, where the majority of your revenue derives from Western Australia, why would you ignore such a tier 0 deposit right under your own nose, where you do already have the existing relationship with the state, and you're a very important part of state revenues. But also on the demand side, you've also got a marketing network and relationships with customers that you've dealt with for decades, right? In the sense of steel mills and the such, where you could sell niobium product directly to them.
And I'll touch just quickly on that as well. We could see Japanese steel mills come in for minority partnerships. That's one non-domestic group, but it's, as Manny's saying, why wouldn't the big super majors just do it?
Yeah, and I agree. And I think about Linus, how they commercialized Mount Weld eventually. It was with a hell of a lot of cheap Japanese primarily provided debt, and it's still in place, interestingly enough, despite the fact that they've obviously successfully commercialized Mount Weld and brought it into production, and it really does represent something that is strategically valuable to other sort of ex-Chinese Asian nations. So I think that's that could be another outcome, as we go through the commercialization.
The rise of Japan and Korea. I've been talking about it for years now. So.
Yeah. Yeah. Well, they're heavily involved in Australia's, mineral industry, the Japanese, in all commodities. So, I think that they would be very, very, very interested in this deposit.
Very good, lads. Cheers for that. Bloody, you're not rich until you sell it.
Fuck off.
That's it.
Thanks, fellas.
Thanks, guys.
Righto, thanks, boys. Good stuff. Right, on to not as good stuff. Calidus. VA's appointed. Now, we're going to keep Bogan on the line here quickly. We'll inject him when we need to, but we actually got a bit of word on the decline yesterday, actually, that this was going to happen. The Pilbara gold miner, Calidus Resources, appointed receivers and managers and administrators for the Warrawoona operations.
Lights out, Matty. Confirmed today, Quartermentha. They're pulled in as receivers and managers by the secured lender.
That is one name you just never want to see.
Quartermentha.
If you own shares in something and they're talking about
you're saying Macquarie.
Quartermentha, that's not good.
Yeah, totally. Yeah, it's good for Richard Tucker.
Really, bloody.
He'll get paid, but not good for anyone else, shareholders. But so Quartermentha pulled in and as receivers and managers. Macquarie's bloody, they're the ones putting the pressure on here as the secured lender. FDI administrators, and the stock has obviously been suspended from trading with a market cap at last close of $94 million. It's a pretty grim outcome for shareholders. And I'll go out there and say this: I don't think the shareholders are going to get a single cent on the dollar back here. That's my opinion.
Why is that?
I think I'll run through the math when I do it. I'm going to actually give you a presentation, man.
Oh yeah, take me on a journey.
But I just think I think it's this. All the money is going to go to creditors in this instance. So shareholders, like if you do get bloody cents on the dollar back, that's a great outcome for you.
So it sounds like it might be similar to when NRW got all the shares in Spartan. That is something similar might be happening to McMahon here because they are the contractor.
Well,
up there.
they're an unsecured lender. They don't have security. Macquarie's got the only. I think to the best of my knowledge, Macquarie's the only secured lender. So, even for unsecured lenders, it's going to be a much worse outcome than it is for the secured lender. Yeah. And then equity's bloody right at the bottom of that stack, getting sweet fuck all.
Yeah, so you got to sort Macquarie, the contractor, and then you're bottom of the barrel as a shareholder.
Yeah. So anyway, I think in like a broad summary, Calidus has been plagued by a combination of three critical deadly factors. Number one, it was a pretty marginal ore body in the first place, and to get the mine built, they shoved it with as much debt as possible. $110 million was debt, and I think at the time it was around 80% of total construction costs was debt funded from my memory. Number two, the condition of putting so much debt in there was pretty egregious hedging profile. And number three, the geological model did not reconcile when they actually started mining. And so all of a sudden they weren't producing nearly as many ounces as predicted, but the vast majority of the ounces that they were producing all of a sudden had to service their hedge book at a price $1,000 lower than spot gold price was because gold ripped. So when the costs went up across the board, there's no margin for them producing that way. Throw chunky debt repayments into the mix, and it was a ticking time bomb from them.
And those hedges were actually recently kicked down the road a bit as well, which is So and because the critique on it from the start was a lack of drill density. That was because 10% difference. Like if you go one. It might be 0.1 of a gram difference, but that is a huge amount when you're mining high tonnage, low grade deposits. This is where we're going to get Bogan back. Bogan, you're still on the line, mate. Give us your geological critique of what's happened up at Calidus. Cobber, go.
So with a lot of these companies, I suggest people go back to the PFS / the resource documents that drove the company and make that final investment decision to build the mine. Have a look at it, and you can start uncovering where things may not have been done as well as they could have been done due to A, there being a gold bull market at the time, or B, there being a COVID butt rush of people bored and just throwing money into random accounts. And so if you have a look back at Calidus' stuff, which it's been well documented again by the mining Twitter folk, hats off to them. The guys out there do a lot of work off their own backs. We don't like calling these companies out for frauds. There are a lot of good people that work at these companies, but the work that gets put into these resources needs to be good going into mining, and it can't just be good for that year one, year two. So this is Calidus' problem. If you have a look at the drilling density that they've supplied in their cross sections for their resource at Klondike, you'll see there's a very high grade section right at the top, and they've drilled the absolute hell out of it. The reason I can put forward that the company may have drilled the crap out of it, the company may not have been the ones that have drilled the crap out of it, okay? So they're not culpable in my opinion, but previous explorers might have come along to this same high-grade area and put other holes in, as companies I want to do. Money's hard to come by in the exploration space. You're a pre-revenue company. You're always looking for that next dime. But if you look deeper in the resource, you see the drilling spacing starts getting wider and wider and wider. As well, the resource grade starts getting patchy. The grade starts dropping off, and it starts getting holes of internal dilution. Now, if you'd imagine that they've cherry-picked that cross-section as the best one, you've got to start thinking of, hey, what's the next line of drilling 20, 40, 60 meters across looking like? And then start thinking, okay, well, if they've got this high-grade area, where companies don't stick holes in low-grade areas to infill them before they've got a mine running, unless they desperately have to increase the tonnage. And even then, they'll only do the bare minimum. It's literally just to get it into the inferred category. It's not to increase confidence to mine it 4, 5, 6 years down the track, because they're hoping a bull market's come, increase their share price. They've gone, bought a better asset. I think it's Robert Friedland's great strategy of taking a so-so asset, promoting the hell out of it, raising the stock price, going and buying a good asset off the back of it. So if you look at Calidus, they've had to paper over the cracks over the years in what you'd call their resource statements, their forward-looking production, blah blah blah. They've bought Blue Spec, they've bought other prospects in the area, they've bought Nullagine, and now their production profile looking forward up until a couple of days ago was actually looking quite robust and quite high grade. Something you could definitely sell to the investing public. Something, however, I don't think you would be able to sell to institutional brokers who have 10 lackeys just like me waiting in their fucking back office asking for their boss to bum them just so they can hear their thoughts on why Calidus is fucked. So anyway, these institutional guys, I think, may have pulled the plug a couple of days ago because 9 days back, old mate from Calidus looked pretty happy and chirpy talking about how Nullagine was going to be online 2025. And hell, I don't think that guy was talking out of his ass at all. I think there was something in place, but the funding got pulled because, well, hell, Klondike doesn't look good going forward, and Klondike doesn't look like it's going to be able to cover the ramp up of this Nullagine. The company's dead for all intrinsic purposes at 3,500 an ounce. It's probably still dead at 4,000 an ounce. It's probably still at 4,500 an ounce. And it's probably still dead at 5,000 an ounce. Bad ore bodies don't float. Last little thing I'll touch on is if you look through previous assays they've got, the ore body looks like it's rather high grade, rather thin, a little bit thinner, a little bit higher grade than is actually promoted in the resource statement. And so they're mining a lot of internal dilution and a lot of external dilution just straight with the ore body. And this may have been why the plant didn't run up to spec immediately. And I think this is the hat dropper, boys. I think this is why everyone's avoiding De Grey. The thing's a lot lower tonnage, a lot higher grade than they're letting on. It's not as big. It's all shear hosted gold, and it'll probably have these sort of issues coming forward. But obviously, it being massive and higher grade ish, forgives a lot of issues. But I feel for the Calidus shareholders. Alkane's obviously chewed a bunch of capital, and they've hit a 52-week low again, which sucks with Tommy Lee just ramping up again. So, but obviously for you gold boys, one to look at.
Yeah, right. So you're saying it could have been mitigated if there was more K-drill holes in there that would have highlighted the patchiness of the grade.
Yeah. See, you get K-drill, and basically if you're able to take that bloke, Ryan O'Sullivan, I think his name is.
That's his name. Yeah.
I've been hearing him whispering in my ears in my dreams. So he can literally go reach down 100 meters down, grab some of that lower grade stuff out, and you'll realize, quite frankly, that, well, you get down there, you're probably not going to be willing to go and dig down there. And hell, Blue Spec, all that, Nullagine. Nullagine is probably going to reach down and, I don't know, pull out some corpses of some previous Novo shareholders.
Yeah.
I think the company
Millennium as well, before that.
Was it?
Yeah.
So it was Millennium, and then it was Novo. Yeah. And Novo's that company that what's that American bloke?
Quinton Henning.
God, Quinton Henning, that's the guy. Yeah. You'll probably reach down. Poor O'Sullivan, reach down and grab a little bit of Quinton Henning's shit because, quite frankly, he is that place's basic toilet. Sold his shareholders an absolute sewer of a mine, and now it's ended up in poor old Calidus' hands. So, yeah, what have Calidus' shareholders learnt?
Big lesson, use Rhino Sullivan.
Just get Rhino Sullivan.
Save nightmares.
He's like the guy off Pop the Wolf. I'm here to sort problems.
Thank you so much, Bogan, for dialing in. We'll let
we'll
let you go back to your desolate lake.
Big fucking news day for you guys. Enjoy.
See you, Cobber.
Trav, mate, go back to the debt side of things with Macquarie.
Yeah.
Yeah,
I want to focus on the equation for Macquarie is secured lender here, because I think it's pretty easy to misunderstand the equation for them. It's been reported by the media that Macquarie still owed $60 million as our secured lender. And the point I want to make is that it's much more dire than that for Macquarie, because the hedge book outstanding, as was last disclosed by Calidus, was 78,000 ounces at $2,370 an ounce. At today's gold price of nearly $3,500 an ounce, that's $1,130 per ounce out of the money on every single ounce. And I've done something special for the YouTube viewers here. I've created a bit of an animation to explain just how fucked the situation is for Macquarie here. And this is learning I picked up from our conversations with Sean Russo. So
I hold Noah's rule, The godfather of hedging. Godfathers.
Yes, the Godfathers.
Fathers, yeah. So, Trav, those out of the money hedges, that's worth a bit over $80, eh?
Exactly, mate.
Yeah, 70-odd thousand ounces, $1,000.
Yeah. So we're gonna go through how does it all work, right? How can everyone sort of just thinks that the hedging, Macquarie takes the other side and it's all cream from there. It just doesn't quite work that way. So I've done this little bit of a worked example of when a gold miner wants to bloody borrow the project finance facility from the bank, what does it all look like? And I think the gold price around the time where Calidus actually locked in their project finance facility and the hedging, the gold price was around $2,450 an ounce, there or thereabouts, right? Like it was not too far away from that. So they Calidus, they want to get $110 million cash in the door. That's what the facility is. You get the cash in the door today when you lock in that facility. Now, in order to be able to facilitate that, they've got to promise to repay that $110 million at a later date with some interest and a profile. And I think what the bank would do in order to facilitate that, well, they have assets and liabilities at the same time. So they're going to get that $110 million in the door from Calidus at a future date, put that on the assets ledger.
Yep.
But how does the bank themselves actually get that $110 million in the first place? Well, they actually borrow that themselves, right? So Macquarie will borrow that at a lower cost of capital, and then they'll make a bit of a margin on the process. But because they're allowing Calidus to to borrow so much and at a relatively low interest rate, lower than what you'd think their cost of capital, the way that they can do that is by also asking them to chuck in a shitload of hedging. In this case, when they came to market, it was 125,000 ounces at $2,355. So for Calidus, that's a liability, because at some point in the future, you're going to have to deliver those hedges. And at that point in time, that liability is denominated in gold, right? You've got a gold denominated liability there because it's a quantity that you've got to meet. And so it's only a small slither there because it's not that much out of the money at this point in time, right? It's like $2,355, gold price is only like $100 higher. For the bank, in order to facilitate that, so they're going to be they're going to receive that, but they basically immediately forward sell that themselves. So they'll enter a forward sale for that 125,000, and they might lock in a better price. So Macquarie will probably lock in, $2,500 average price for that. So they're pocketing money on the delta.
I think that's the most misunderstood part of hedging is that people think Macquarie are making shitloads at the moment because gold's at bloody 3,500 ounces. That's already been cancelled out. As soon as they do the hedge, they give it, they buy it back, done.
Exactly.
It's sorted on the
within
days, I think.
And the scary thing, if you look at their liabilities there, Macquarie, so they've got on their liability side, $110 million themselves, but they've also got a gold denominated liability, which is honky rosy in most scenarios, except if the gold price goes up and the mine fails. And that's what we're going to talk about now. So this is a scenario I'm going to look at. Gold price has gone up, but the mine doesn't work. So, Calidus, they've spent the cash and they've built a mine, so they built the mine, but unfortunately the mine doesn't work. So who knows what what that asset is worth now because they, the bloody, I don't know what the mine's worth if it doesn't work like planned. So just put a question mark on that one. Then what have you got? Okay, now because the gold price has gone up, the hedge book liability is bloody shot up too because, the out of the money value is much more. Yeah. And that flows through to the bank on the exact same corresponding instruments on both the asset and liability side. But hang on, the banks probably got to write down the value of the repayments that they were going to get from Macquarie for the facility because are they even going to be able to service it if their assets are not that good? Their security's less as well, right? So the banks, what they've actually got secured is not worth what they thought it might have been. Then they've got to take a haircut on the hedge asset side of things too, because can the mine actually even service the hedges for the bank to get paid? But the bank's liabilities are still there. They've still got, they borrowed 110 million and they forward sold the gold to make a margin there, and they've still got to meet that. So how do they do that? If you look at it today, of course, there's been some debt repayments and some hedging delivered. So today, the liability on the liability side there for the bank, there's $60 million remaining for Macquarie, but there's 78,000 ounces at 2,500 or thereabouts, right? So that's like $80 in the hedge book that is needed for that Macquarie's like fucking out of pocket of as well.
Yeah. So just to double explain it to me as per usual, Trav, because as soon as they set up the hedging with Calidus for this example, they then forward sell it at a bit of a higher price, and that's all sorted. But that's only all sorted if they are going to get the gold eventually. But now they are more than likely or nearly guaranteed not to get the gold. So now they need to find the gold to deliver into the 2,500 circa price that they've promised to sell
might,
into.
If they're not going to get the ounces out of the mine to deliver into the hedge book, then Macquarie has to go into the market and pay $3,500 an ounce in order to then receive $1,000 less per ounce on that. So you're immediately out of pocket just to meet that liability. In fact, I'll actually let Sean Russo explain it in a more effective words when we first spoke to him about a year ago, Matty.
Yeah, absolutely. And I sort of touched on that earlier in my experience when I was in the banking. I mean, one of those common misconceptions is that banks take the other side of the trade, right? People think, all the upside, the bank's made all that. No, as I said, they've borrowed. I mean, when you do a project financing, you borrow money and you get the money, and you borrow gold and you don't get the money. The money gets put on deposit, and that's the forward sale. So if you think about it like that, you have two obligations. The bank has two liabilities from the company. They've got the cash liability and they've got the gold liability. And that gold liability is only limited by the gold price going up. Now, in a log normally distributed world where there's a 50-50 chance of the gold price going up or the gold price going down, when they run their risk profile, they go, that's really good. If the gold price goes down, under any circumstance, they can still repay the debt. That's why they're comfortable to let the company hedge, right? If the gold price goes up and the mine fails, you have to go back in the market and buy that gold, like we talked about with all those companies that they didn't fail, but the hedge book got so big they just raised equity. Companies like Newcrest and all the others back in Barrick back in 2000. So the bank, one's on balance sheet, one's off balance sheet, but that exposure's there. So the negative mark to market. And I have the very unfortunate position of having turned up to quite a few creditors meetings in the late 90s. As the lender, right, as the secured lender, and when a company dies, I mean, it's, companies in a death spiral, they do some terrible things in terms of just the greengrocer and the news agent. No one gets paid, right? And the mine's still producing gold, so everyone at the mine says, "Oh, mate, we poured heaps of gold. It's good. We're good for it." And all these poor little people turn up, and we're owed. They say, "But you lent them $40 million. Why are you claiming 80? Well, because we had to go and buy the gold back in the market. And that cost us another 40. Now, we're stupid. I'd like to shoot the lending officer that ever did the deal in the first place. But our shareholder, the Rothschild family, lost twice as much as they lent because that gold-denominated liability had increased. The gold price had gone up and the mine failed.
And look, there's just a few other tidbits I want to digest here. I think some questions going to be asked around this company's last capital raise, right? Like, so in late March, they raised 16.5 million with a placement via Canaccord and Euros. And with that raise, I even had a whole slide in the equity raising presentation about supportive lender. Like how supportive if they bloody called in Quartermentha and administrators. So
and then what they were doing with those, what was it, the lithium deal they did?
Yeah, there was a lot of stuff
Right,
with
look.
the Nullagine to bring in. Everything was to try and increase production so that they could, actually have some ounces getting spot gold as opposed to the low price.
But I think they did pay, was it a few million? I don't quote me on that, for that lithium, those lithium rights and everything, and like
Hayoma, JV,
fucking waste of money now.
Well,
so it must give you a gauge of how bloody under stress that operation is. If Macquarie are willing to put the foot down and forego both the debt and hedging obligations.
Well, they're not necessarily foregoing it.
them.
Like what
but there's
will
a
keep
risk they
going.
mightn't get. They ain't going to get cents on the dollar.
I think the way to interpret it is that they're asking for either a recap or a trade sale, but they're going to need a trade sale of about $150 million in order for them to be made whole and even have any kind of residual for the bloody unsecured creditors in the process as well. Because you got to go the 80 plus the 60, as opposed to the other way
so
around.
They're 96 mil market cap with what bloody how much debt? 60 debt.
Well, the market cap's kind of irrelevant now, It's
So like the EV, what's the EV of it? 100 and if you add the hedging,
hedging too,
probably 220 mil.
Yeah, and if the mine is completely unencumbered by debt and hedging, maybe in a lofty gold price environment, it's like it's a worthy asset, but it can't. It's just like it's clearly incapable of servicing the finance. And like to the capital raise, right? You often see this in distressed capital raises. The lenders tipping into the raise too, hence they're supportive. Macquarie tipped in. Remember Taurus tipping into the Galena capital raise before they went into bloody administration as well. And in both of those cases, the lenders turned out not to be very fucking supportive at all. So I just want the money miners to understand this, right? Lenders don't tip in because the equity deal is compelling at all. They tip in to get the deal over the line because it's a selling point for the fucking brokers. Like, it's the only way to get new equity in. And where does that equity end up? Well, it ends up fucking helping the balance sheet, paying down some of the debt. It doesn't actually create any value. So it's good for Macquarie, even though they have to tip into the equity raise as well. So, yeah, I just think, like, you've got to be real dubious of these sorts of selling points. It's a real education lesson for the money miners out there in this. And I think the easy critique is to point to the financing and say that the debt and hedging fucked the company. But that misses, I think, the whole point to what Bogan said, right? This mine should never have been built. The geological model didn't stack up versus the mine plan. That's fatal with a low-grade ore body. It was a massive diligence error. And if the diligence was done properly, there wouldn't be a financing catastrophe in the first place because that capital could have been better allocated elsewhere instead.
Yeah, no, and it's one of them ones you just look back and you think, and the 80% debt was a function, obviously, because they couldn't get the equity. But you just always wonder if it was fully equity funded with no hedging and no debt repayments, just wonder in this gold price, I know costs have gone up as well, if it would have worked. I don't know.
I think of two things. I think of the chat we had with Darko and Fisty. I think that's what you're pulling on there, Matty, how you go about funding projects. And I also think about what you told me last year, Matty, and that was always investing in assets with quality ore bodies. And that was the downfall of this. Body. That's it. And that was, what underpinned the downfall here.
But then you look at Karlawinda, you wouldn't say that's the greatest ore body ever, 0.9 grams, but look how much cash they've made.
At least it was a uniform ore body, right? And everyone used to make
married up to
everyone used to make the comparison between Klondike and Karlawinda, but they're like, to Bogan's point, one of them actually was uniform and low grade. The other one, fucking not uniform.
Yeah. It's anyway, it's could be a bloody Gascoigne 2.0, this process. So
they just need a new discovery now.
they need to go, hey mate, they need to, as Bogan said, they need to get bloody get K-drill in there punching some holes and try find what would you call this one? Maybe instead of never.
Good stuff, fellas.
Yes, it's bloody thoughts with shareholders there with these situations, because they are, as you said, at the bottom of the pile for these situations, and they fucking lose money.
Thoughts
It's
with
horrible.
Workers don't get paid in these
workers,
situations.
yeah.
Like imagine getting, it's horrible.
Yeah. Anyway, we'll keep posted there, buddy. I think that's it for the day, lads?
Yep.
That is.
Jesus Christ, sorry to me uranium friends. Buddy, Trav, do you want to allude to Sierra Rutile, mate?
Oh, mate, there was that much, newsworthy headlines today. I'm so disappointed. I didn't get a chance to talk about my favourite deal ever, the fumble in the jungle. There's a takeover offer on the table from GemCorp. We'll have to save that one for maybe tomorrow or a later date.
Oh, mate, God. You're doing your duty to the SRX holders, mate. Just like there is love out there. Oh, beautiful. Righto. Thanks to all the partners, our brand new Cornerstonery. That's a word, isn't it? Cornerstonery partner.
Sure, mate.
That is a word. Axis Mining Technology. And we've even got a new one we're going to rip out this week. Mineral Mining Services as well. Mate, we're just flying. Can't end the OGs. VRIFY, GetWet Solutions, DSI Underground, Silverstone, CR Insurance, WA Waterbores, K-Drill, and you would have noticed a spark chart at some point today and in every past and future episode, because that is what we use. Hootaroo, money miners.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.